thank you all. Thank you so much for joining this webinar. I'm really excited. Wish you all a happy new year. I'll just tell you how this conversation has been happened. I was attending one of the largest conference for credit unions, CU Reach, in Palm Desert. I was fortunate enough to attend that event, and it was a mind-blowing session given by Samantha. So it was really an eye-opener. I don't want to miss that opportunity. I want to bring that to my audience also. That is why this conversation is happening. Thank you so much, Samantha, for joining this webinar.
You're welcome.
Yeah. And so this new year, right, when I had a conversation with multiple credit union leaders, they were asking what's next in 2026, right? So what initiative they wanted to do. So they were keep on asking these sort of questions to me, and then I wanted to take that to an expert and then get an answers from that. And that is the reason why we are conducting this webinar, Samantha, right? Just a quick introduction about me. I am the CEO and co-founder of Cloud Banking. We provide digital lending solution across 10 different geographies. And to give a short introduction about Samantha, I think she's a known speaker across credit union industry. And right now she's the Chief Growth Officer at Acumen Financial Advantage. And she has 2 decades of C-suite experience with and she was earlier working in CXO of Co-op Solutions, where she was serving 3,500 financial institutions with 60 million customers, right? So Samantha, I'm sure that it would have been much better if you can give much more information about you to the audience so that it will be more comfortable for all of us.
Sure, I'm happy to do that, Manny, and it's so nice to be here. Of course, I met you at a conference about 3 months ago that I was giving in Palm Desert, the California, Nevada Credit Union League, California, Nevada, and Utah Credit Union Leagues conference in front of a huge audience of CEOs and C-suite executives, and have been giving these talks all year. I'm a growth accelerator. I own my own firm called Power and Light Collaborative. We help community financial institutions like banks and credit unions really pinpoint the things that they need to do, the strategic levers to pull in order for them to see immediate growth. And that's something that we've been doing on the fintech side and the financial institution side. I also am an advisor in residence with Ernst & Young. And I'm also, as you said, a principal and chief growth officer for a company called Acumen Financial Advantage. All of these organizations, and as you said, I was the chief experience officer at a payments firm called Co-op Solutions. All of these institutions, all of these firms are focused on all of the change that's happening in the financial institutions world today, and everything that the consumer is experiencing, what they're needing to do in their financial lives. Acumen takes a look at how do we immediately improve the balance sheet. So it's all of these ways to unlock growth with immediacy to improve ROA, improve yield, remove volatility in the space. Also, EY is really looking at long-term big change management projects. We're seeing so many mergers happening in our industry. So many CEOs are saying, well, the easy path to growth is just to merge. If we merge, then we'll scale, and that'll be the easy way out. We still have to find our organic growth. And then, of course, Power and Light is finding the quick wins for us to be able to activate our growth and find ways of really doing change management inside our financial institution. So it's been a pleasure and a journey to work with so many tremendous FIs and really ensure that we're all here for the long run, that there's so much change hitting us in our world today. What got us here isn't going to get us there. That's what I like to say. The same strategies we've used to grow for the last 30, 40 years, that ship has sailed. The world has completely changed. And so we really need to shift the way we do business. And that's not easy. And so I'm out on the road a lot, speaking with credit union leaders, community banking leaders, fintech leaders, vendors, all trying to figure out, how do we work better together? How do we better make change happen in our financial institutions? What C-suite leaders are asking you, what are the things I should be doing in 2026? I've been hearing this question asked of me for the last 10 years because the amount of change that has happened in the last 10 years is more change than that's happened in the last 40 combined. So I love this leaning into what we need to do differently. I love that we all see a path to growth, and most credit unions and community banks do have a strategy. The challenge that they're finding is executing on that strategy, and how do I best prioritize the changes that we need to make and really get my entire team all together, and all my vendors and all of the providers that we have all on the same page to make growth. And the one thing that remains constant, which you'll hear me come back to as you ask me questions today, it's really all about the consumer. We really need to be radically diligent about designing our FIs around the consumer to ensure we have something called product market fit. So I'll talk more about that, but it's wonderful to be here. It's wonderful to see so many names on the screen, and really happy to speak with you today, Manny.
Perfect, Samantha. It was a pleasure to have you here, and I believe that the audience will also. I'm 100% sure that this is going to be an eye-opener session for all of them. No doubt, right? So just to give the basic logistics, housekeeping updates to the audience, right? So if you have any queries, this is going to be a Q&A where I'll be asking questions to Samantha, and she'll be answering to all these questions. And if the audience has any questions, you have a chat option or Q&A option there. You can just post all your questions here. Our team will be moderating that questions, and then will be asking to Samantha. And we also have a separate session, separate last 5 to 10 minutes we have allocated specifically for the audience related questions. Meanwhile, if something really interesting pops out, and obviously I don't wait till it goes in end, and I'll just start popping all those questions. So feel free to add your questions there in the chat option or Q&A option, right? So without any further delay, we'll just quickly get into this webinar, Samantha, right? So we'll set the basics, right? So first, so it's credit union. We all know that it's people helping people, right? In 2026, what do you think this statement is? The promise what credit unions gives to the audience, right? People helping people. It is still applicable in 2026. Are they really following it, or how's that in the market?
That mission is critical. People helping people. There are so many people in America today that need help with their financial lives, and that's across the economic spectrum. The thing that's different is that the way that we have attracted members before is having a great rate, is that we have really focused on having rates drive growth. That if we post a great rate, that will bring all of the prospective members into our environment. And if we do that, they will then buy everything else that we have in our financial institution. Here's the challenge. First, we have a macroeconomic challenges that we have been in a rate environment for the last few years that has not made that possible. The second thing, it's a highly commoditized solution. It's a very passive solution. You may get that member, but then you're not going to have them do more within your financial institution. It is a very one-time passive approach to financial well-being. When we say people helping people, a great rate is great, but it is aligned to one or two of our largest bills in the average consumer's life. The challenge is that there are many, many, many other needs that a member has. And what we have been, the trend that I want us to stop doing is I want us to stop being focused on shiny objects, and I want us to stop focusing on one product at a time strategies. So we tend to look at product centricity rather than member centricity. And I know that sounds radical, but if we really are true to ourselves, we have to think through, how does a member experience and gain support and solutions from my credit union or my bank. The member is really expecting to grow money, move money, auto invest, round up, find financial nudges embedded in their life to help them do more and improve the way that they perform financially. And the way that we're set up as a traditional financial institution is really looking at our highest net worth individuals, having them do any sort of wealth creation or financial well-being focus is really outsourced to an organization like LPL. We don't have that service in-house. We have traditional, we have loans, we have checking accounts, we have savings accounts. And what we're finding is that the consumer is really used to having their needs be completely understood and embedded into whatever app or fintech they're using. One of the stories that I told when I was on stage at CU Reach, where we met, is that I talk a lot about my son, and I talk a lot about young people. And my son is 14. Because of the digitization of banking, he cannot use cash anywhere in town. And he rides his bike around town. He wants to be able to, buy an ice cream or get a cookie after he's in sports. And he says, "Mom, none of the shops accept cash. So I need digital payments. I want a debit card. I need to see how I'm spending." And when he was 11, he wanted to invest. 2/3 of Gen Z, 63% of Gen Z and 67% of millennials use apps to do all of those things. They are focused on, how do I get money in? How do I grow my money? How do I move my money? How do I spend my money? How do I make sure I'm making the right choices? And what's happening is traditional financial institutions don't have the right products for them to do those things. And it's not really focused on how they actually improve their overall financial life. So it's this idea of, we've had these traditional products. The market has moved to be a much more digitally centric, embedded, data-centric, personalized financial experience. And because cash is no longer king, it's skewed audiences to be much younger when they start their banking experience, and they have exceedingly high expectations. They're exceedingly empowered, and they're very, very comfortable moving their money and doing business with neobanks and a series of apps. One other point on that is that I broke my arm last summer, and I had to go to physical therapy. And all of the physical therapists' assistants in the place where I was strengthening my arm, which I can now do this, they're all in their 20s. And they asked me what I do. And I said, I'm in banking consulting. And they said, we just use apps. Out of 10 physical therapy assistants between the ages of 22 and 27, only one was doing business with a traditional financial institution. So when you think about that, it's mind-blowing, and the statistics support it. And I was talking to a chief banking officer, and they said, talking about this era of digitization and app usage, he said in Q3 of 2025, they saw $75 million in outbound ACH transfers going to Coinbase. This is showing that the market is moving, the expectations have changed, and traditional financial institutions really need to shift the way they're doing business in order to grow, because the consumer wants to grow. They want to grow their financial life. Loans are one lever to get us there. So we have to really rethink our entire value proposition and how that's delivered.
So you touched on a very important point, right? These Gen Z and millennials, right? So there are credit union leaders who are also part of this audience. So last month also we conducted a webinar on what are all the things that a credit union has to do to attract these Gen Z customers. So according to you, with your experience, Samantha, if you can tell to a audience that okay, these are all the things that a credit union leaders has to do to attract these Gen Z guys, right? So what kind of suggestions that you give to them?
Well, let me tell you the importance of this question.
Okay.
We're in the midst of the great wealth transfer. Boomers are
Mm,
retiring. They have the majority of the wealth. That wealth is going to be transferred to their kids.
right.
Those kids are Gen Z, Gen Alpha, Gen Z, millennials.
Uh,
If you do not have the experience they expect, that money will not stay with you.
mm,
The boomers that you're serving today, that money, we rely on metrics like deposits. We look at metrics like our asset sizes. We need to look at metrics like engagement. We need to look
mm,
at metrics like utilization.
mm,
That's the truth. Because what
mm.
we're hearing from a lot of financial institutions are stats about dormancy. Even
Okay.
though our uh, our our traditional audience, the average age of a credit union member is my age, 51. They are in midlife, and we need to look at what's the next market segment we're going to go get. We're
Okay.
expecting over the next 5 years, $3 trillion in banks and credit unions to move to fintechs. Why is that?
Mm,
Because the experience at fintechs meets what members expect. It comes back
mm,
to this idea of product market fit. So when
mm.
we think about how we need to design our financial institutions, many credit union leaders say, what should my branch strategy be? Your branch strategy is being decided on your member's phone. What
Uh,
is the experience and what are all of the things that I can do from this device, from the app? And
mm,
how is that app and all of the solutions that you provide in the app going to be better than what I'm
mm,
going to get at Chime, at SoFi, at Robinhood, at Coinbase, at all of the different, at Venmo,
mm,
all of these different fintechs that start with one use case and cross sell, cross sell, cross sell, cross sell, cross sell, because the
mm,
experience is so dynamic. They have all of the tools and they think about the next action that that a consumer needs to take to be able to get more of that, to win more of that consumer's financial relationship. So it's a
okay.
completely different way of thinking, but it is
Okay.
a good question. How should we be able to go after and get Gen Alpha, Gen Z, millennials? Uh, it's so important because that money is slowly attriting out of our organization. I mean, just as the stat I told you, 75 million left in a quarter from one financial institution. It's happening now. How do
Mm.
we really think of our FIs from the consumer's point of view rather than our point of view?
Yeah, I think okay. So many customers are moving out, is it? Okay, okay. Interesting.
And it isn't always immediately recognizable.
Mm,
You
okay,
know what I
okay.
mean? Because we
Yeah.
look at our traditional metrics, like I
Mm,
said, and even those traditional metrics, they're not fantastic. I speak with CFOs and CEOs all day, every day.
okay.
Their jobs are hard, like really
Mm,
hard today. I had a CEO tell me it's never been harder to be a CEO in the credit union space. This is why merging is kind of the easy answer. If we and then there's a good rationale for that. We can put
mm,
our assets together, we can put our spending power together. It creates strength to really give us the resources we need to be able to
mm,
make the investments to grow what members need. But if we look at our ROA and net income is below 1%, we're about 50 basis points away from
Right.
where we need to be. We see slight upticks there, but that's a big challenge when these are big investments that financial institutions need to make to stay relevant and critical
Okay.
for consumers. But the bigger number is market share. Credit unions have held steady over the last 12 years at about 9% market share. 9%. And when we look at Chime, Robinhood, these are two neobanks that started in 2012. They now have 25 million members, million customers. They call them members. And they each have a valuation about 1.5 billion. So it's actually, no, they've got 1.5 billion in revenue. So they are, talk about who's capturing market share. These guys are really behaving like tech firms developing products that are going to create such stickiness that a member doesn't want to leave because they're seeing so much value in the experience.
So I think how can a fintech can grow that much big, Samantha? Like, so from, I mean, after seeing the Chime, I think you have also touched this point in CUREACH event also, right?
Yeah.
Chime and Robinhood. I think they've significantly increased their member base. But what are the things that a credit union can learn from them, right? So you touched upon seeing at different metrics instead of seeing how much loans and how much deposit. We have to see a different metrics called engagements, right? So what type of different engagement? So similarly, what are the things that credit union can learn from these two fintechs? Or I mean, it could be Coinbase or whatever, right? If you can tell those in a bullet points, maybe that will be a great help for the audience.
So I worked in a tech and payments firm for 20 years, and it's a different mindset. I mean, you're thinking about what new solutions are we going to keep rolling out all the time in order to make this was in a B2B organization, but in order to make our clients be as relevant and important and critical to their members. And that's a mindset. I think in traditional financial institutions, we've really been kind of one product, one division at a time. And I'm going to talk about two things. I'm going to talk about the way we really roll out new solutions and think about it from the consumer's point of view. This is kind of in continuing this point. The other part, I think, is cultural. Like we have two ways that we need to solve for this. So the first, let's look at solutions. So the beauty of Robinhood and Chime, they're new companies. Like they didn't have to start from legacy technologies, from what worked for them before, having to overcome kind of the way we've always done it, constraints. They're not dealing with legacy technology constraints. Most credit unions and community banks have something like 500 to 700 vendors, 500 to 700 vendors. So when you have to think about how all of those vendors fit together in a singular experience, that's a lot of mental spaghetti to untangle and turn into an ecosystem. So these neobanks were able to start by noticing white space and a gap in the market. Chime started with the underserved. They said, how can we create microtransactions, microloans, getting your paycheck 2 days early, things that provide financial relief to a consumer. So they started with this problem. How can I provide greater financial relief to the consumer? That isn't starting with a product. That's starting with a problem. We don't often start with a problem. Our assumption, partially because we look at things through our balance sheet, through our point of view, which is hard not to do. The thing that makes us the most money is interest income. So we see the way to solve a problem is by creating a lower rate, which then creates more money in the pocket of our members. That's one way. And then that particular loan rate, you only touch your loan. When's the last time I had a big loan? Maybe 7 years ago. Like that's something you only do every 5 to 7 years.
Right.
What about all the time in between? So the things that that both Chime, Robinhood, Venmo, they're focusing on daily money movement, daily interaction. If you create a passive experience and lean on passive products, you're going to have a passive audience base, and they're going to go find engagement and help and growth and utilization elsewhere. So how do we become so valuable that we need to go to our credit union every day? So this is on the product side. They were thinking of solutions that fit together. They're micro solutions that fit together in a way that creates daily engagement, daily interaction, and relationship penetration. So that's a wedge that Chime created. Take a look at Robinhood. I spoke a moment ago about this idea of investing. I told you about my son when he was 11. He's like, I'm interested in investing in NVIDIA. All of his friends had interest in doing this. And a lot of the brokerage firms are enabling you to fractionally invest in the stock market, which teaches youth, and which youth just need time. You know, everybody knows the laws of compound interest. How do we create engagement and utilization by helping them get in the market and be able to grow starting at a very young age? And so Robinhood figured this out, and they saw traditional brokerage firms are really focused on the human-to-human interaction. They saw this opportunity to digitize and democratize investing and find ways to create growth and wealth for people that can start with $1. Most traditional financial institutions have much higher thresholds for how you can invest. So Robinhood started with investing, then they started offering debit cards, then they started offering other types of investment accounts. They're offering all of these different solutions that really provide this tremendous experience. And what they're finding is that experience is so anticipatory and supportive and smart that they now have 25.9 million customers doing business with them. How many credit unions have seen that kind of growth in the last 10 years? We have to look at what use cases need to come together in a way that drives utilization of the credit union. We need to not look at those use cases product line by product line by product line profitability. So I served on the board of a credit union for 11 years. We would look at the financial performance of the credit union and look at how each product performed. We really didn't look at the member and the product penetration and utilization and engagement and the depth of the relationship of each member. So that was giving us not quite the best metrics for us to say, is my credit union healthy? So that is this shift, is going from product centricity to really this idea of the totality of the embedded solutions, deepening the relationship with more and more and more consumers. So there's a lot baked into that, but I'm going to flip to the culture side. So I work with a lot of fintechs, and the number one barrier to a sale for fintechs is that they don't have to just create a widget and say, here's my widget, I'm going to sell it to a credit union. Credit unions are kind of annoyed by that because they're saying, okay, that's great, you have this product, but how does it fit into my tech environment? How does this fit into my business processes? How does this fit into my member experience? A lot of their vendors don't do that thinking all the way through. That's one of the things that one of my organizations, Power and Light, helps fintechs solve for, is that most fintechs say that traditional teams and traditional credit unions and community banks are saying, this is the way we've always done it. I don't understand how your use case fits into the way we've always done it. So culturally, we have to open up our aperture on how we do business. We have to think about how we work cross-functionally in a credit union. How does the lending function work with the deposit, with the chief deposit officer, if you have a chief deposit officer? How does it work with the head of retail? How does it work with the head of digital? How does he work with finance team? How do you work with all of these functional areas together? How do I work with technology? How do I work with all of these functional areas together? Because the member expects a unified experience across the use cases that those different teams and the org structure are responsible for. So that's the first thing. The second thing, your poor head of technology in the credit union has to think through, how do all of these use cases fit in my tech stack? So every credit union has a unique tech stack. They have their core at the base. Then they probably have their lending operating system. They have their payments platform. They have their digital banking platform. And then they probably have an array of fintech use cases that are coming out of Circle and coming out of the Reseda Group and all of these wonderful accelerators and venture capital firms that are helping to aggregate and bring together the fintechs in the market. But I'll tell you, as a leader, culturally, that is a lot for our leaders and our credit unions to absorb. It's a lot to think through. And one of the big things that I've noticed in working with my colleagues at Ernst & Young, when we're meeting with credit unions, some of the largest credit unions in the country, many don't have a change management process. Many don't have a business transformation team. Many don't have a project management office. Those are things that come in tech firms. They typically don't come in banking institutions. We're very operationally focused, regulatory focused, risk focused, which we should be. And we need to think through, how do we migrate change management across the organization to not only make sure that the technology will all work together, but how do all these business processes have to change in order to create a really experiential, embedded service model that is digital first? It starts here, and then it will go to the branch and the app, or sorry, the in-person experience. So we have to think through, what are the things that people can do in their, how do I create that integrated experience for the member? And what are all the things that a consumer can do in that experience? And how do I not resist that as a leader in lending and marketing and retail and digital? How do I work really closely with my peers across those functions? So I think those are the two main themes that are causing challenges.
Samantha. Yeah, interesting, Samantha. But for the audience sake, I think, so I understand as a credit union, I need to be cross-functional.
Yes.
Right. If you can explain with an example, say, if you can take a use case and then tell that, okay, this is what, say, for example, I'm a credit union, I want to see a growth or whatever use case it's going to be, right? So how you can explain to the audience with an example, okay, this is what the use case and this is what you need to do, like that. If you can explain with an example, that'd be of great help, Samantha.
There's so many use cases. I mean, it's a product development lifecycle. I mean, traditionally it's a PDLC process and then a commercialization process. Those are two big things. How do we really take a net new solution and really understand across functions, what does this look like? So product development lifecycle, you bring all the functional areas together. You're going to say, all right, for us to implement this with success, how are we going to do it? What are the things that we're what's going to need to work in the back office? What processes will need to change? Are there anything from, do we need wet signatures on anything? How do we authenticate a member? How do we keep it safe and have it be low risk? How do we make sure that that there's really great engagement and a service model around it. How are we going to ensure member adoption? So many fintechs will, get a contract with the credit union, get the product in that credit union, but then members don't use it because we didn't deploy it, or we didn't deploy it properly. We didn't think about the use cases that would need to go side by side. What other products does it fit with? That would be part of that member's life. We have to think like a member, not think like us, and really do change management in the credit union to make that possible. So a specific use case, let's say you're doing real-time payments. Let's say you are doing money movement. Let's say there's a credit, I've told this story a few times, that there's a credit union that just, I'm now the name of the company is escaping me, but Saeed Khan is the founder, and he helps with wealth transfer when a member dies, so that the money stays in the credit union. So they find dormant accounts, or people pass away every day.
Right.
What should we do? Not just offering this technology to recognize when a member passes and all of the paperwork that has to happen, but how do I make that a great experience so that the wealth stays in my credit union? What credit unions have done have said, what if we did a personal outreach to that member and sent flowers to keep the member in the credit union and ensure that those deposits stay with us rather than having them leak out? It's all of these things that come together in order to create a really machine-like, watertight, embedded ecosystem for the consumer, and have this work really well on the back end. There's a credit union, MSU-FCU, in Michigan State Federal Credit Union. I was just meeting, I met with their CEO at Money 2020 this year, and she says, oh no, we have a project management office. We are doing this change management to ensure that as a decision gets made to deploy a new solution, that we think through all of the things that have to happen in the back office, all of the things that have to happen in the front office, and all of the ways that consumer will engage with us to make sure that it has optimal uptake, that solution will be cross-sold with other solutions, that it will create more engagement, and it'll create really strong stickiness with the member. So credit unions have to start thinking like they're technology companies. And how do I deploy new use cases in a way that creates greater engagement, utilization of my credit union, so that I can provide more value to my members?
Wow, great. Okay, Samantha. So switching gears, right? I think they spent a good amount of time on these, setting the basics. But one important era that we are into is the AI era, right? So wherever you go, so even AI, right? So
say that again. Say one important area where we're
AI, artificial intelligence, right? AI era, huh? So
the AI era, the AI era. Yes.
So it's a complete buzzword in this industry now. Even so, I was attending a Finovate event. I was talking in CU Reach. I mean, I was also listening to CU Reach events. Speakers also, they were all keep on saying this. It's not a buzzword anymore. Everybody started implementing it. So as a smaller credit union, or a credit union which is, say, a less than $200 million kind of thing, right? A small credit union. So what do they want to step in the AI era, right? So for this particular 2026, what kind of things that they want to set up in this particular year, Samantha?
AI is a tool. It's a tool. What problems do we need to solve using AI is a different question. I think we get back to, really searching for shiny objects. I mean, the two biggest topics are crypto, stablecoin, digital assets, and AI. Many credit unions are looking to AI to say, what problems am I solving? So easiest problem is looking at efficiency in the credit union. How can I make my employees work smarter, not harder? What are the repetitive tasks that I can take out of what my teams do across the organization to then have them do higher value activities? So those are things like, well, first, fraud and risk. I mean, we're taking it from a human, we're looking at things like on the payment side where I grew up. We had Falcon Fraud Manager or things that Falcon rules that would help us know or see when we'd see a pattern or trends in fraud and be able to create a rule that would shut that down. AI can see that in less than a second. They can find all of those rules and catch fraud so much faster. We look at things like AI in, so how can we do things for it to reduce risk, to improve efficiency, to create opportunity for the highest value work for our teams. The other part, I think I saw a question come in around personalization. How do I have AI better understand who is my member base? Who is my market and how are they segmented? What are the trends and behaviors that I'm seeing across my existing member base? Because I will guarantee everybody on today, you probably, if you look at your overall members, you'd say, oh, we've got 60,000 members that are part of my credit union. I'll bet you 20% are your true members that are really using you every day. Like, that's why I come back to utilization. That's why I come back to engagement. You got to really look at those metrics to see who's really using my credit union. AI can come in and have you really get clear on who your members are and what their typical use cases are and how they do business with you. There's so many tools that exist. So first, use AI to define who your membership base is, and then define who would be your next best market to go after, and what use cases do you have today, and what should be the next use cases. The second thing that they can do is look at engagement methodologies. What's the best way to engage and reach out to this member and design the best use cases that might fit together to engage that member? And you're going to look at your data. You're going to look at all of the data that you have in your credit union, and AI is a tool that can look at that data and say, okay, this is how your members are engaging. This is your miss right now. These are the ways that you need to then engage differently. And all of this, if you go back to what problems are we solving for, all of this is to ensure that we are as relevant and important to our members as possible. If you're a passive parking lot, if you're offering checking, savings, and a loan, and that's your 3 product you've got 3 products per member. How deeply important and critical are you to that member's financial life? That's not the strategy that Chime has used or Robinhood has used to go from no members to 25 million members in 10 years. That's how they are deeply penetrating the market. How do we get deeply honest with ourselves to say, are we offering the right use cases? Can AI help us understand what use cases are we not offering across wealth building, spending, payments? What types of loans then we need access to capital. We need access to liquidity. What kind of financial tools and financial education? How do I cut my subscriptions? Think of yourself like an everyday person. And what are the things the everyday person has to do to manage their financial life? And what would make it important to be in your app all day, every day? I had and a lot of times we'll have credit unions say, well, I've got a great app. Like, well, what are all the things that a member can do in your app? And you'll kind of have like deer in headlights look. Like, what are all the things that a member can do in
Yeah.
your app that makes it so they shouldn't have to go to all these other apps? And you
Right.
don't have to be all things to all people, but when you really know who your member is and you know what they need, you'll provide the solutions based on their financial needs, and you'll grow more market share.
Okay, interesting. I think one of the podcasts that you are talking, where you are saying that so people are asking what is the AA strategy, and one of the members were saying what is the Excel strategy, right?
Yes.
So yeah, can you just explain that, right? Maybe that will be relevant to the audience also. What is that? What is that all about?
Well, it goes back to me saying it's a tool. I'd say,
Right.
what is your risk strategy?
Mm.
What is your personalization strategy? What is
Ah,
your relationship deepening strategy? It
right.
is a tool to activate something. I would say to a CFO, how are you going to optimize your balance sheet? He's like, well, first, he or she, let me go look in my spreadsheet to see what I'm going to do. They don't have a spreadsheet strategy. And granted, AI is different than Excel. I mean, I'll give you that. But I mean, it's a silly example to say, what business problems do we have? And how do we use these tools in new ways? And fintechs are generating new ideas all the time. How do those use cases of AI knit together that either reduces our expense, reduces our risk, reduces fraud, improves member engagement, improves the right next solution for the member, offers financial nudges? So there's many things
Okay.
that
Okay.
financial institutions can do to leverage these tools to solve more of their problems. And I'm seeing a lot of questions actually in the chat about some of
Yeah, yeah,
this.
yeah, yeah. I think I think we have come to the last portion of this webinar. So I think without any further delay, I just quickly take a few questions from the audience. Okay.
Okay.
Yeah, I think Laura was asking about, I mean,
Yeah, Laura's got a
how,
lot of good questions in here. Hi,
yeah.
Laura.
So basically, they want to define their ideal customer profile in 2026. What are the new uh, uh, going beyond the demographics, right? So what do you think the best ideal customer profile in 2026?
Okay, well, it will depend on the credit union and their community and what they're about. But I'll tell you, I love that this question, Laura, is about how do we go beyond demographics. So I've got a good friend that works in persona development, and she says, I'm going to put a set of demographics down, and then this set of demographics will help us understand what this individual would need. And so this was about 5 years ago. So she said, this person lives in the is from the UK, is in their late 60s, is a public figure, is in the upper echelon of wealth. And so kind of put these basic age, location, financial demographic, etc. Two pictures came up that fit that demographic profile: King Charles and Ozzy Osbourne. Two, one is an aging rock star, one is the King of England. They have very different needs. One is a rock star going across the country, playing metal. And the other one is living in a castle in England. So we need to think through behaviors. We need to look at data around engagement. We need to look at the things that those personas might want to do, the things that might be their financial needs. So you can break down, you can take a look at demographic profiles, but then you're looking at psychographics, behavioral dynamics. And I would say, look at your existing data and look at who you have in your community. What does this community need? And what are the things that you can do that would immediately engage and provide value we're always trying to provide value. We're not trying to provide products. We're trying to create outcomes. So once you better understand your member base, start with your existing member base and think about, once you understand who they are, what needs are we doing really well? Are we solving for really well that provide value? And where are we falling short? That's where you start to invest. Now,
Okay.
I see follow-up questions about where in the member life cycle do credit unions usually see trust breakdown.
Right.
Trust, as many people have heard me say, is about character and capability. Credit unions win all day, every day on character. We do the right thing for members. We're always acting in the members' best interest. Where we fall down is, my son, I know you talk a lot about credit unions, but do credit unions really have what I need? Can they issue me a debit card where I can look on my phone and see how I'm spending? Can I invest now? Can I track what I'm doing? Can I learn about investing? How do I get started in my life? So he didn't quite trust. And granted, he was 11 at the time, but this is when people are starting their financial lives. This is why we've broken trust with the 20 somethings that said, I just use a bunch of apps. I don't even bank with a bank or a credit union. I use apps. I'm looking for a financial ecosystem. So can the consumer trust that you have the ability and the capability to deliver for them? And so what can you do to proactively prevent it? You start use case by use case by use case and create an excellent experience. You take a look at your app and say, what are all the things a member can do in my app today? And how is that experience easy and frictionless and service-centric, so that we're actually delivering what they're trying to do and we're doing it with speed and ease? That's how you start to win. You got to win the primary financial interaction. That's the first trust feather. Then you deepen the relationship by having them do more with you. You get greater and greater engagement, greater product utilization. That's the next trust feather. Then you're helping them with their financial outcomes and helping them proactively, solve for their financial future. That's another trust feather. It isn't just about presenting products to consumers and praying, hoping and praying that they use your credit union. It's really, I think there is a sea change in how traditional FIs are responding to macro market factors. That's the big change. And I say it over and over again. We are about consumer centricity. This is a human-centric problem. That we are using technology, insights, and the latest, trends like AI, crypto, the digitization of the entire financial ecosystem. We're taking that trend, but we're applying it to human needs.
Okay, interesting. Super. I think Matt, another important question, right? So they are a small credit union, right? How it is realistically possible to keep up with the fintech like Chime and Robinhood, and with even for the large credit union for that matter, right? I know this credit union. So when it comes to technology tools, right? Is it realistically possible that we can even compete with these players?
I think it is. I mean, you start small and you grow. You start small and you grow. It's one thing at a time. So what are the things? And I get it. Matt, I so get it. It's easy to get discouraged and to say, we're small. Well, Chime started small. Like these organizations, granted, they had probably a lot of investment coming in, but I will say, if we start with our members and build out from the member, and then see that dynamic engagement start to happen. When you just start with one segment, test and learn. I was speaking with Jill Sammons from Baxter, from BCU. She says, I take my frontline teams and I take teams that just want to see, how can I break something? Like, let me go play in a sandbox and think about what's something new that we could do that would really serve who our members are. What are we noticing? Your frontline teams see everything. They can probably tell you what are the next use cases that we should provide? How could we improve the service experience? What could we do differently that would just create a wedge that creates more utilization of the credit union? So when we ask, is it realistic to expect the average credit union to keep up with fintechs and big nationals? Big nationals are losing market share. It's not a factor of money. It's a factor of behavior and decisions and strategy and execution. So when it comes to execution for smaller financial institutions,
right,
we can build it ourselves, expensive and slow. We can buy it. That is also can be expensive. We might not have it, but we can also partner, and so what do we build? What do we buy? How do we partner? And what that means is that we have to be very talented and scrappy in thinking about how do we need to shift, like I go back to the way that we've always done things, to make incremental change at speed, to be able to partner with fintechs who are dying to partner with you and put their systems and use cases in place that create better value and better outcomes for your members. And it's really making those choices on, it's not, going back to AI. Do I use it to improve efficiency? Do I use it to improve the risk and fraud experience? Do I use it to improve the service experience with chatbot and reactive service? And how can I potentially look at, how can I provide the best possible use cases that will help me stand out in my market?
Okay. Super. I think we have come to the end of the webinar, Samantha. So I think one important takeaway that you tell to the audience, right? People are all waiting for the takeaways. Of course, just one important takeaway that you want to tell to the audience in 2026, what is that's going to be?
Number one, the first foundational element, do you know who your members are? Do you know who they are? Do you know the personas? And do you know the third thing? What are the bundles of products that fit those personas that you have today? And how can you deploy them in a way that would get them to use your credit union more? Simple. That's simple. That's simple stuff. Interestingly, the highest performing credit unions, I just spoke with Linda Arman from Four Leaf Federal Credit Union.
Right.
She said, we grew $1 billion in deposits by doing just that. In 1 year, they grew $1 billion in deposits. And they did it by deeply understanding their market and just getting the solutions in their members' hands as easily as possible. And their CEO, Linda, came from marketing. She grew up when her job was knowing who the member is. And so that it's enabled them to be really creative and nimble in maybe putting their solutions and deploying them together in a different way that really made it easy for the member to say, oh yeah, that will be helpful to me. So there's a lot of great stories out there of credit unions that are doing really innovative things, and they're borrowing from what fintechs and neobanks and big banks are doing, but then they're really just knowing who their members are.
Okay, that was a brilliant takeaway, Samantha. Thank you so much. I think the audience definitely loved the session. Thank you so much, Samantha, for giving an awesome session like what I saw in Sea Reach also, right?
Thank you. Happy New Year,
much.
everyone. And we can do this. I think that's what I always say. We can do this.
Perfect.
Go make the change inside your credit union.
Perfect. That was a lovely message given to the audience. We all can do this for sure. That this particular year is going to be an awesome year. Thank you all. Thank you so much for joining the webinar. I really appreciate you all. Thanks so much, Samantha, for joining us here. Right?
Thank you.
Bye, Samantha. Thanks for joining.
Bye.